Hello, folks. It is Thursday, May 25th. It's about 1 o'clock in the afternoon on the East Coast of the United States. In this video, we're going to look primarily at gold and silver, but I want to set the context for that. And so we're going to look at the currencies and interest rates just quickly, and then we'll get to the precious metals. So let's get started. Current market drivers as I see them. We've got the debt ceiling, kabuki theater, whatever you want to call it. Should have a resolution of that by June 1st. Next FOMC meeting, June 13, June 14. The question out there is, are we going to pause? Not going to pivot, but are we going to pause? Or are we going to get another hike? Of course, my expectation is that we will get another hike. There was another report this morning from the BLS indicating that the economy is running hot, which of course they don't call it the Bureau of Lying Statistics for nothing. Everything that comes out of the BLS is cooked. So the economy is not running hot, but those kind of reports give the Fed cover to keep raising rates. And of course, that's my expectation, is that they are going to continue raising rates for the next several years. And so, if your part of your market strategy is based on a pivot, you might think about a plan B. So potential market catalysts. Okay, so we know what's currently driving the market. What's out there on the horizon that might change basically what's happening in the financial markets right now? Obviously, resolution of the debt ceiling. They're either going to raise it, suspend it, or we're going to default. And so, some resolution of that. And my expectation is they're going to increase it. They've done it 78 times. I don't think this will be the first time that they don't raise the debt ceiling. More likely that they would just suspend it rather than not raise it, and come up with some, inability to come to consensus. We're just going to suspend it for now. Some BS story like that. Outcome of the FOMC meeting, it takes the ambiguity. The markets don't like uncertainty. And so whatever the outcome is, the next rate hike or a pause, it will remove the uncertainty from the financial markets. So that could catalyze financial markets to make their next big move. And then we have an economic summit. This is the non-Western world, obviously, St. Petersburg. This is June 14 through 17. We've got 81 countries that have asked or expressed interest in joining the BRICS Plus organization. It's a possibility that all of those countries or some subset of those countries will be added at this economic summit. There will certainly be conversations along those lines. They could announce a new currency at this summit. They could announce, well, they probably wouldn't do this in public, but they could tell all of the attendees of this economic summit, say, hey, you need to dump U.S. treasuries. And of course, Russia has already divested themselves completely of U.S. treasuries. China's still got some, not as much as they used to hold, but a mass exodus from the U.S. Treasury, U.S. treasuries could happen. And I'm just spitballing here. This is all pure speculation on my part. One of the reasons that I speculate along these lines is if you and I were the non-Western world, and we wanted to strike at the Western world, that would be one way of doing it. That would certainly be one way of doing it. En masse, nobody's buying treasuries anymore. And not only that, we're dumping everything that we've got. And keep in mind that the BRICS has already made it clear countries that join BRICS will not be held to honor their debts to the Western world. IMF, BIS, loans to either of those organizations, U.S. Treasury debt, none of that will matter inside the BRICS organizations. And so just possibilities, and of course, will the new currency be gold backed? That's my expectation. So anyway, we'll see. This is the agenda for the St. Petersburg summit. And I've highlighted where they're talking about, the topics that affect the Western financial world. Obviously, cooperation under BRICS, BRICS partnerships, de-dollarization. I mean, if you think that de-dollarization is not happening, well, they've got it printed on their agenda. I mean, they're talking about de-dollarization formally and publicly. So, new world economy, not global, but still interconnected, multipolar world. And so, if you've heard those kind of things and thought, rumor mill, conspiracy theorists, etc. No, it ain't conspiracy, folks. Here it is on the economic summit agenda for the non-Western world. These are the topics that they are clearly talking about and letting the rest of the world know that they are talking about those topics. So anyway, let's jump into the charts. When we're looking at the precious metals, there's two primary drivers that act as headwinds, tail brakes, however you want to look at it, against the precious metals. And so US dollar is obviously key. When the US dollar is strong, the precious metals tend to be weak. And obviously in this chart, we can see that US dollar is strong, has broken above the resistance at the upper median line of this shift pitchfork. And so far, the week's not over yet, but so far that is a very impulsive candlestick. Notice that price is at the high of that candle. So not only did it break through resistance, it did so impulsively. Now it's pushing up into a potential resistance zone, although if we notice from this prior high, the resistance, price rolled over at the top of that resistance zone, which just happens to be coincident with the 40-week moving average at this point. And so would not be surprising at all at this point to see the US dollar push all the way up to the 40-week moving average at 105.57, somewhere in there. MACD is in bear mode, but on a new buy signal, and energy is above mid-range. And so anyway, this is a bullish chart for the US dollar. That's the weekly time frame. Here in the daily time frame, same thing, bullish action, break above this support resistance zone, pull back, test for support, and then off to the races on a move higher. And, yesterday we got an impulsive price bar, and so far today we've got another impulsive price bar. My expectation is the dollar will push all the way up into at least this horizontal support resistance zone, and probably at that point, being so close to the 200-day moving average, we'll get at least an overthrow up to that level. May not stick for very long at that level, but probably get an overthrow up there at 105.6 or so, the 200-day moving average. MACD in bull mode, suggesting that the primary trend is upwards, and energy is very elevated. So certainly, another bullish chart for the U.S. dollar. I was hoping that this was a counter trend rally and that we'd see the dollar roll over and fall off, but clearly that's not happening. we're going to look at, I've just got one chart of the euro and one chart of the yen just to show what the background is for the US dollar. And so this is the euro in the weekly time frame, and we can see that it, basically did a double top, rolled over pretty hard, and has now dropped below, this is the 10-week moving average that failed as support. We've got this horizontal, that was a potential support level. So obviously back here, this pink dashed line acted as support, briefly acted as support last week, but this week the euro has dropped through that level. MACD is overbought, so basically double top in MACD, and has rolled over, appears to have rolled over. New sell signal in MACD, and energy has dropped below the midline of the stochastics indicator. And so, based on this chart, the euro is headed lower. Potential targets, lower median line of this modified shift pitchfork or the 40-week moving average, they're pretty much coincident. That's a long ways down. And likewise in MACD, we got a long ways to go before the euro becomes oversold based on MACD. Japanese yen, similar story, has broken below, potential support at the 40-week moving average, potential support at this horizontal level. Clearly this week has dropped below those possible support levels. Next target would be the median line of this shift pitchfork. And let's see, MACD has rolled over, dropping into bear mode on a sell signal. Energy is very low. And so, again, like the euro, the yen is looking very weak in the weekly time frame. And so that's the background for the US dollar index. Between the yen and the euro, that is, what's 57, 13, 6, that's 70%. So 70% of the US dollar index is currently weak, which sets the backdrop for the US dollar being strong. And obviously that's what we're seeing in the US dollar charts. Now the other headwind, when we're talking about the precious metals, which, that's the focus of this video, is precious metals, the other headwind is interest rates. And so interest rates are rising. This is the yield on the 10-year note in the week. This is weekly time frame, excuse me, that's a typo there. That should be weekly. So let me correct it. And we can see that price has pushed up above potential resistance at the 40-week moving average, bullish move higher this week, pushing up into potential resistance. That doesn't belong there, that's for the daily chart. I got messed up on my charts here. Sorry about that, folks. Next potential resistance level is this upper median line of this modified shift pitchfork. So we got a ways to go before interest rates, the 10-year, runs into its next potential resistance level. Looks like we just got a new buy signal. You can't really see it there, but the green histogram, the fact that the histogram has turned green, that's a new buy signal in MACD. Energy is above mid-range. So anyway, this is a bullish chart supporting higher interest rates. And of course, that's my bias. I expect higher interest rates, like I said, for years to come. 10-year note in the daily time frame, again, bullish activity. We got a little bit of a pause, a little bit of a sideways consolidation at the start of this week, but clearly as of today, rates are headed higher and doing so bullishly. This isn't, it's not just kind of waffling along, this is a strong move higher. Appears to be an impulsive move higher. And this is what I had highlighted in the previous chart, meant to have it on the daily. This is an open gap. And so Markets abhor a vacuum. And so open gaps on a financial chart, you can think of that as a vacuum, and almost certainly those open gaps will be filled. And so at this point, reasonable to expect that the 10-year note is going to fill this gap, which takes us up to, what's that, 3.9 and the upper median line of this modified shift pitchfork. So, if I were placing bets on the 10-year note, I would be placing them at 3.9 as my target. MACD's got a little ways to go before it becomes overbought. I would guess it's got plenty of room to make it up to that 3.9 target. Lots of energy to do so based on stochastics. And so we got two strong headwinds blowing the price of the precious metals down, if you want to look at it that way, both the US dollar and interest rates. So now we're going to look at the gold charts. I skipped the monthlies for today, just doing a quick update. Here in the weekly time frame, we can see that price has rolled over, and gold was overbought. We went from, what's that, 1618 up to 2080. So what's that, $460? So a $460 move in October, so what's that, 6 months, 7 months, somewhere in there. So a big move in gold in a relatively short period of time brought them to an overbought level. I was assuming that gold was going to stage a breakout up above 2,000 and continue. Obviously, that has not happened. Overbought in MACD and rolling over. Looks like this week we've got a new sell signal. So we now got a sell signal in the weekly time frame for gold. Big strong bar to the downside this week. Energy dropping off the elevated level. So downside targets. We've got this prior peak, prior high, which is, somewhere in there. So that's a potential support level. We're almost there now. Below that, we've got this is the first median line extension of this shift pitchfork. That's potential support level. And then way down here, we've got the 40-week moving average. Now, I don't expect us to get anywhere near that. What's that, 1932, lower median line takes us 1913 or so. And so I would expect, we'll find gold will find support somewhere down there and head higher, albeit it is overbought. It remains overbought. Let's see, in the daily time frame, more of the same. Gold has dropped through several potential support levels, 50-day moving average, median line of this shift pitchfork. Downside targets, we've got this, I'd call this a minor horizontal support level at, 1923, might find support there. Stronger support down in this horizontal range, this horizontal zone, although, that's not really a strong level. Although we can see that it was resistance here, support, resistance, support. So potential support in that horizontal zone. And then we've also got the lower median line of this shift pitchfork. So a couple of potential support levels in gold. MACD has dropped into bear mode on sell signal. Notice that, based on the guidelines I use for MACD on overbought and oversold, we are approaching an oversold level in MACD. This was the level of MACD where price turned around last time. And so maybe we'll see that again. And we got a little ways to go before we get there. Energy is low. Silver in the weekly time frame, dropped through support, big impulsive bar to the downside this week, and has not bounced. So haven't gotten any kind of bounce yet in silver. Week's not over yet. Potential support within this horizontal support zone or at the 40-week moving average. That would be my next level of support. That's like 2210 at the 40-week moving average. Overbought in MACD, and we've got a new sell signal in MACD this week. Energy is about mid-range. Let's see, silver in the daily time frame. Big drops yesterday and now continuing today. Today we've lost another support level. This horizontal, that was a potential support level. We got support there for, that's probably four trading weeks of support. Obviously it failed today, and silver is dropping lower. Next potential targets, this horizontal support level, pretty good support there. We can see there it is as resistance, support, resistance, support. So potentially support at that level. Although once silver gets to this level, it's pretty close to the 200-day moving average. So it'd be kind of surprising if silver makes it down to this level, that it wouldn't get at least a quick pop down to the 200 moving day average just as a test of support. So there's two downside targets there. MACD has dropped into bear mode and has a pretty good amount of distance to go before becoming oversold, and energy very low. So not looking good in the short term for precious metals. Obviously, the mining stocks are following the metals lower. Big move this week in, this is GDXJ, the junior miner ETF, 5.8% drop so far this week. Just about at potential support. We can see we've got both the 40-week moving average and the lower end of this horizontal support resistance level. So potentially coming up on support pretty soon there for the mining stocks, this ETF anyway. New sell signal in MACD, and MACD remains overbought. Energy is below mid-range. What else? I would point out something that's catching my eye here is that we do have declining volume, and certainly that's what we want to see. When price is dropping, we want to see volume dropping as well. And so that's an indication that sellers are getting tired. They're not just puking their mining shares into the market. They're holding on to those shares. So GDXJ in the daily time frame, big move down yesterday. It's continuing today. Again, we can see here we're approaching potential support levels. MACD in bear mode. Energy is very low. We've got a ways to go before MACD reaches this potential oversold level. So anyway, the mining stocks are likely to head lower for a bit, along with precious metals. That's all I got for us today, folks, and I will talk to you soon.